a 10,000 plus crore mega IPOs coming on 12th of December from one of the India's most trusted financial brands, ICICI Prudential Asset Management Company. This company manages almost 9 lakh crore of assets, has a return of equity of above 80%, and will list at a valuation of around 1.05 to 1.07 lakh crore rupees. But this IPO is also 100% offer for sale. Not a single rupees is coming into the company. So the real question is this a wealth creation opportunity for you or just an exit opportunity for the foreign promoter? In this video, I will break down every important detail: business model, financials, valuations versus HDFC AMC and Nippon, risk, GMP, and finally, should a retail investor apply or skip? What's till the end? Because my final view is not going to be apply blindly. So, first let's discuss about the quick IPO snapshot so that you know the basic terms. The name of the company is ICICI Prudential Asset Management Company Limited or ICICI Pru AMC. So, IPO type is 100% offer for sale by the foreign partner Prudential Corporation Holdings UK. So, there are no fresh shares. Issue size is around 10,100 to 10,600 crore. Shares offered are 4.9 crore equity shares of face value of rupees 1 each. Price band is 2061 to 2165 per share. Lot sizes for retail investors, it is 6 shares per lot. So minimum investment is 12,990 rupees at the lower band. Now the issue is opening on 12th of December 2025. Issue is closing on 16th of December 2025 and the listing date is 19th of December 2025 on BSE and NSE. So category wise reservation, if we talk about QIB, they hold up to 50% of the net offer, retail have at least 35% and HNI have at least 15%. Plus, there's a special reservation for ICICI Bank shareholders, roughly 24.5 lakhs shares reserved. So, if you are an existing ICICI Bank shareholder, you get a separate quota on top of the general retail category. Now, what does ICICI Pru AMC actually do? So, ICICI Prudential AMC is one of India's largest asset management companies by active asset under management. So, as of 31st March 2025, it managed quarterly average asset under management of around 8.79 lakh crore. Now, what business does it run? First of all, mutual funds, equity schemes, debt, hybrid, ETFs, index funds, solution oriented funds. This is the core revenue driver, mainly through management fees charged as a percentage of asset under management. Secondly, it also offers portfolio management services, so high ticket portfolios for HNIs and institutional clients. Thirdly, it also has alternative investment funds. So these are more sophisticated strategies, long, short, credit, thematic, etc. funds. And fourthly, offshore and advisory mandates. So that involves advising foreign investors who want exposure to Indian assets. Now, let's talk about the distribution mix. So, based on the recent disclosures, equity asset under management is sourced from 39% is through mutual fund distributors, 16% is through national distributors, 26% is through direct channels, 8 to 9% is through ICICI Bank, and remaining shares are from other banks. So, it is a well diversified distribution engine, not overly dependent on ICICI Bank branches. Now, revenue is mainly recurring management fees on asset under management, some advisory PMS and AIF fees, and other income, that means treasury income on own investment. So, in simple terms, they don't manufacture physical products, they manage other people's money and take a small cut every year. Now, let's zoom out to the mutual fund industry. As of September 2025, the total Indian mutual fund asset under management crossed 75.6 lakh crore, growing over 12% year on year. Now, the SIP asset under management alone has crossed 15.3 lakh crore in June 2025 and is now more than 20% of the industry asset under management. So, what does this mean? More Indians are shifting from FDs and gold to mutual funds. SIPs are ensuring sticky long term money, which is great for AMCs. Regulatory focus is high, but penetration is still low versus the global market. So, there is a long runway for growth. ICICI Pru AMC, being one of the largest players with strong brand and distribution, clearly benefits from this structural trend. Now, let's talk numbers because brand is good but cash flows are better. So, as per the latest available financial summary from 2023 to 25, revenue has grown in financial year 23 from 2,838 crores to 3,758 crores in financial year 24 to 4,980 crore in financial year 25. So that is a roughly 32% revenue growth from financial year 24 to 25. And the profit after tax has grown from 1,516 crore in financial year 23 to 2,050 crore in financial year 24 to 2,651 crore in financial year 25. So profit after tax has grown nearly 29% in financial year 25 versus financial year 24. So coming to return on net worth. So in financial year 23, it was around 70%. In financial year 24, it was around 79%. And in financial year 25, it is around 82.8%. So this seems to be an insanely high return on equity because asset management is a light capex, high margin business. Once you reach scale, incremental revenue is very profitable. So financially, it has high growth, top line and bottom line, very high ROE and strong profit margins. On pure numbers, this is a very high quality cash generating business. Now, coming to valuation, is it cheap, fair or expensive? Now at a upper band of 2,165, based on the recent profit numbers, the PE multiple works out to be around 40x. So let's compare it with the listed peers in the AMC space. So ICICI Pru AMC has a PE between 36 to 40x, ROE is around 83% and revenue is around 4,977 crore. Whereas HDFC AMC has a PE of 45x, return on equity of around 32% and revenue of around 3,500 crore. Nippon Life India AMC has a PE of 41x, ROE of 31%, revenue of 2,230 crore. And when I talk about UTI AMC, Aditya Birla Sun Life AMC, so PE is much lower, around 20-23x. ROE is also lower compared to ICICI and SDFC. So the picture is clear. ICICI Pru AMC is being priced slightly cheaper than SDFC AMC, similar to Nippon on PE basis. But ICICI has much higher ROE and larger revenue base. So on a pure PE versus ROE lens, the valuation looks reasonable to slightly attractive. Not cheap like a turnaround stock, but also not crazy expensive compared to SDFC AMC. At the upper band, media reports indicate an implied valuation of around $12 billion, which translates to around 1 to 1.1 lakh crore market cap. So you're basically paying a small discount versus SDFC AMC with superior ROE and scale. Now, let's talk about the offer structure. Who is selling what? So this is important and it is often ignored. The IPO is pure offer for sale. So there are no new shares. The seller is Prudential Corporation Holdings UK. So the foreign joint venture partner. Prudential is expected to offload around 9.9 to 10% stake. Now ICICI Bank, which holds around 51%, is not selling in this IPO and will remain the majority shareholder. So what does this mean to you? Company does not receive any money. Entire IPO proceeds will go to the selling shareholder. Balance sheet, capital adequacy, etc. basically remain the same. So your investment thesis has to be based on, do I want to buy a piece of a high return on equity cash generating AMC at this valuation? Not. They will use this money for expansion because they won't get the money. So let's talk about the big positives clearly. First of all, brand and trust. It is backed by ICICI Group, one of the strongest financial brands in India. So it is already trusted by crores of mutual fund investors. Secondly, scale and diversification. So quarterly asset under management of nearly 8.8 lakh crore across equity, debt, ETF, PMS, AIF, offshore. And thirdly, insane profitability. So ROE of greater than 80%. Profit compounding over 25 to 30% recently. Now, let's talk about industry tailwind. Mutual fund asset under management are at record highs. SIP culture is exploding. Financialization of savings are ongoing. And if you are talking about comparison of valuation versus the peer, so it has a slightly lower PE PE than the HDFC AMC, but with superior return on equity and revenue base. And if we talk about shareholder reservation, there is an extra chance of allotment if you are an ICICI Bank shareholder. So for a long-term investors who likes asset-light, high cash flow financial business, this checks many boxes. But if we don't talk about risk, then it is not worth it. So let's go on the risk part. It is a pure regulatory business. So SEBI controls expense ratio and fees, and any future regulation capping fees further can hit the revenues directly. Secondly, it is a market linked business. So asset under management is linked to the market level. In a big bear market, AUM can shrink, performance fees can fall, and profits may stagnate or decline. Thirdly, high competition. It is competing with HDFC AMC, Nippon, UTI, Aditya Birla Sun Life AMC, plus new fintech-led AMCs. Fourth, employee attrition. So the DRHP highlights high attrition, over 30% in financial year 23 and 24, and around 26% in financial year 25. Fund management is a people business. So loss of key talent can hurt the performance plus asset under management. Fifth point, that is seeming to be a big risk, that is no fresh issue. So IPO money is not going into the company. This is more of a promoter monetization event than a growth funding event. Sixth point, valuation is not dirt cheap. It is not a bargain basement PE. You are paying a quality premium and returns will depend heavily on AUM growth plus market cycle. So anyone applying needs to be comfortable with regulatory risk, market risk, and valuation risk. So as of now, reports are suggesting a grey market premium of around 250 to 280 rupees per share, which implies a roughly 10 to 13% expected listing gain at the upper band. But do remember, GMP is unofficial and highly volatile. It can change completely based on overall market sentiment, FIs in flow, and subscription numbers in QIB and HNI. So I would treat GMP as just as a sentiment indicator, not a guarantee. Now the big question, should you apply? So I'll break it down into three buckets. These are completely my views. It is not a financial recommendation. Please consult your financial advisor. So if you are a short term or a listing gain trader and your goal is pure listing gain, then you should track the QIB and HNI subscription on day 2 and day 3. So if the QIB demand is very strong, the listing gain probability usually improves. With the current GMP, a 5 to 50% pop looks reasonable if the market stays stable. But it is not guaranteed. Treat it like a trade, not an investment. So second case is if you are a long-term investor. That is if you have an investment horizon of 3 to 7 years. This IPO will fit if you like financials, but you want diversification beyond banks and NBFCs. You understand that earnings will be volatile with markets, but long-term asset under management should grow with rising SIPs, increased mutual fund penetration, and financialization of savings. In that case, ICICI Pru AMC can be seen as a core compounder candidate in your long-term portfolio, similar to HDFC AMC. So entry at IPO is okay to slightly attractive, not deeply discounted, but justified by ROE and growth. And the third case is if you are a very conservative or a low risk profile. So if you don't like market linked volatility, don't understand AMC business model clearly, or already hold HDFC AMC in Nippon, UTI in large weight, then it can be a perfectly okay thing to skip this IPO. And because missing one IPO will not destroy your wealth and getting stuck in something you don't understand might. So to summarize, the business quality is very high, industry tailwind is strong, financials are good as it has high growth and high ROE, valuation is reasonable versus peers, it is not dirt cheap. And when we talk about risk, there can be regulatory, market cycle, competition, high attrition, and it is a pure offer for sale. Personally, if you ask me, I would classify the ICICI Pru AMC IPO as good quality business at fair to slightly premium valuation. It is suitable for long-term investors who understand the mutual fund economics. If you found this breakdown useful and you want more deep, no nonsense IPO and market analysis like this, please like this video so that YouTube knows this is valuable. Subscribe to Insider Monk and comment below. Are you applying, skipping, or waiting for listing to buy later? I'll be tracking the subscription numbers plus listing performance. And I will do a post listing follow up explaining whether the IPO actually delivered or disappointed. Thank you.